We'll get started here. I know we're just about at the hour. Good morning to everyone who's in New York for Climate Week and for people joining from other parts of the world. Welcome. My name is Hamish Stewart. I work as an advisor to Samudra Oceans, and I've been working with banks and investors on climate change related investing for the last decade here in London. And we're thrilled to be bringing together this little roundtable here during Climate Week to look at the blue economy and looking at where investors and other capital allocators need to start thinking about in order to sort of increase the investment to the level required to really enable adaptation and resilience at the global scale, and it's not quite there yet. And so in terms of today's running order, I'm going to give a very brief introduction, provide some housekeeping on the webinar platform, what we're doing today, and then we're going to dive right into hearing from the experts, because we're going to hear a lot today, and it's covering a lot of ground, a lot of water, a lot of coastline, and then I'm hoping you're going to be able to follow up with the speakers on specific details, following this session. So in terms of the housekeeping, you can all see there's a Q&A box here. You should be able to ask questions in the Q&A box. So we're going to have some presentations, and then you'll have an opportunity to ask some questions. The webinar today is being recorded, so if you want to share it with colleagues, let us know, and we'll be happy to do that after the live session. And I want to thank you all for joining us, and thanks to the speakers for making time, because everyone is busy, and everyone is particularly busy during Climate Week. So thanks for dropping in. In terms of the scale of the opportunity around the blue economy, since 2015, it's been talked about by some NGOs. WWF puts a number at the global value of the blue economy at 24 trillion. So that's covering shipping, energy, ports, tourism, and ocean ecosystems. And most of that value is not really being considered by most investors at present. And then on the adaptation and resilience side of it, UNCTAD estimates that adaptation and resilience investments in the coastal ecosystems and cities is around 3 to 6 trillion in value, and that needs to be, more investment is required in order to manage global warming and also the impacts of rising sea levels and other challenges associated with climate change. And so, what the UN and some of these larger NGOs specialize in is throwing out really big numbers in terms of, the whole market, the whole opportunity. But then how do you break that down into investable tranches and investable businesses and projects? And so that's kind of what we're going to get into today at different scales. Looking at what types of opportunities exist at different scales and in different geographies. And I think we'll hear from a couple of the speakers about how different geographies should be approached differently when you're investing in both the coastal ecosystem, but also the ocean system and more productive oceans. So we'll hear about that. And just in terms of who's speaking today, we have 3 really exceptional expert speakers. So first we'll hear from Brooke Zhang, who's a senior associate at Tailwind Climate, looking at how they approach climate adaptation and resilience and frameworks that they have developed to help support that process. And then we'll hear from Kristiane Davidson, Head of Impact and Sustainability at Oceanborne Impact. And they've been doing really exceptional work, sort of developing the market around ocean economy investing and investor interest in this theme. And then we'll hear from Joyeeta, CEO and co-founder at Samudra Oceans, really trying to shift the dial on investment in ocean resilience and blue carbon credits globally, and actually making something happen, which is much harder to do than, there's a lot of talk out there, and this is part of what New York Climate Week is about, but we're talking about what can you actually do. So we'll hear from them. I'm just going to make a couple comments on the extent of the need. We heard some headline numbers from UNCTAD and WWF earlier, and that extends to sort of coastal adaptation and resilience, and investment in marine coastal ecosystems is something that hasn't historically been done. And as a Canadian, I know that the preferred approach to ocean systems in the past has been just taking everything you can find and taking it out, whether that's cod or salmon or other globally important fisheries. It's about taking it and not really worrying about or investing in the restoration. So I'm looking forward to hearing and discussing about that, and that extends to seagrass, seaweed, mangrove, salt marshes, and oyster reefs, among other ecosystems globally, that investors are only just starting to get comfortable investing in. And then before we get into the speaker presentations and remarks, I just wanted to say a little bit about, why there should be a sense of urgency around investing in coastal resilience and ecosystems that we all rely on. And I think Joy might make some comments about this too. The extent to which the ocean drives a lot of important parts of the global system, the weather system, and also the agricultural system relies on a stable ocean system. And what we're seeing now is the ocean currents and some of the ocean warming that's happening. It's reaching an extent to which it's going to disrupting some of the basic systems that we rely on to feed ourselves and just to have just a more broadly productive economy. And so that's increasing the sense of urgency. There's also the challenge of sea level rise. So in the US, I think it's estimated that this average sea level rise is approaching the 1 foot mark for most coastlines in the US by 2050, so in continental US. So that's very real, and people are still a little bit in denial about that challenge and how you deal with that. And that doesn't, the example is from the US, but it extends to a lot of geographies. The second point is just the Atlantic meridional overturning circulation current, the AMOC current. So there's some very big systems in the ocean that distribute nutrients and heat around the world. And, those are changing because of climate change. And so, there's an opportunity for investors, insurers, and banks to kind of better understand the ocean science and the companies working on scientific basis with the ocean to adapt to these big changes. And I don't think, again, it's a cliche, but I don't think anyone has seen the scale of climate or ocean system change that we are currently witnessing. So there's a lot to get your head around, and that's why we're having this discussion, but also to kind of break into pieces that are a bit more manageable from a capital allocation and insurance perspective. So without further ado, I will hand over the mic to Brooke Zhang from Tailwind Climate, who can give a bit more detail on their approach and her background and what they're doing to make ocean system investing a bit more actionable for investors. Brooke.
Thank you so
Thanks.
much.
Mm-hmm.
So basically at Tailwind, we developed this climate adaptation framework we call our taxonomy, and this was launched back in May of this year. Essentially, Tailwind, we really do a lot of research, advisory, and investment into adaptation innovations, and a big chunk of our framework overlaps with the the ocean adaptation space. The goal of this taxonomy, and by the way, I hope my background noise isn't too loud, New York City sirens, but the goal of this taxonomy is to demystify the specific sectors that investors can look at if they're exploring this space in general. It also helps them understand what are the physical climate impacts that are relevant to each of these sectors, whether they're natural, physical, or human assets. And some of the solutions, whether they're intelligent solutions, right, like data, or hard tech financial solutions like insurance, that are most relevant to helping to make that sector that matters to them more resilient to climate impacts. So basically, we divvied up all these sectors that are critical to make more resilient to climate change into 8 themes and 35 sectors. And thank you so much for sharing that. Basically, as you can see here, those are the 35 sectors, 8 themes in the circle. And the ones that are circled are the 5 that I really want to highlight for this panel. These 5 are marine ecosystems, fishing and aquaculture, community and urban planning, tourism, and water infrastructure. And I know there's a lot of other words on here, but I should say, while these 5 are the ones that we want to highlight, of course, there's a lot of overlap between solutions that say can address more than one sector at a time. So I definitely want to keep that in mind. But as an example of how this categorization would work, for marine ecosystems, I would say Samudra oceans would definitely fall under this taxonomy sector, right? Regarding it helping to mitigate ocean acidification, supporting biodiversity on top of its carbon capture offerings. So with this, we realized that this taxonomy was so critical to develop and launch because the risk of ignoring coastal and ocean adaptation is massive, as we already shared a little bit about. But basically, according to Fathom, a flood modeling company that we are a fan of, coastal floods are predicted to increase by 99% by 2100 in any scenario. And the average sea level rise, as Hamish mentioned, is going to be around 1 foot across the US by 2050. And according to FEMA, which is the Federal Agency for Emergency Management in the US, even 1 inch of water for sea level rise can cause as much as $25,000 in damages. And so if you just move that up on scale, the impact is huge and the risk is huge. I was going to share another data point, but I think that this risk is very clear, and I'm going to move on to the next part, which is how, I guess I'll say, in New York City alone, which is where I'm at right now, by the 2050s, a Sandy-like storm could cause $90 billion in damage and economic loss. And I say Sandy-like from Hurricane Sandy back in 2012, because the impacts of these climate disasters are just going to be increasing in severity as a result of climate change. So those are the risks. But then what are the upsides in investing in this large-scale regeneration, restoration of coastal ecosystems, as well as of course, coastal resilience to protect our communities? I'm going to go back to FEMA again, because they pulled some really interesting numbers here. They actually were able to map out that by investing in wetland and reef restoration, for example, every $1 invested can help you avoid $7 in losses. And on another note, investing in, say, infrastructure improvements and innovations for, say, building resilience for those coastal communities, every $1 invested avoids $4 in losses. I will acknowledge that one of the things that makes the ocean economy harder to invest in is that oftentimes the immediate beneficiaries that you think about aren't necessarily the payers, of those solutions. So if you take a coastal reef restoration startup, the first degree beneficiaries are the reef ecosystems, but usually the government is the payer or the investment firm that wants to support the space. But from that, the second and third degree beneficiaries are the tourism industries, fishing and aquaculture, the coastal communities' livelihoods and economic well-being. All of that trickle-down impact needs to be taken as seriously, even if the immediate effects aren't as obvious or necessarily the top of someone's mind, especially with the space growing so rapidly, but it's still being nascent in some ways. And an example of how investing in this could benefit you, I'm actually going to share Hawaii's coral reef insurance policy. So basically, this is the first time this has happened in the US, but back in 2022, the Nature Conservancy was able to insure Hawaii's coral reefs and basically help prepare for any hurricanes or tropical storms that would damage the reefs and ensure that the payout would actually help to restore them before that damage happens. So I'm going to wrap that up here, but later on, happy to take any specific questions around our taxonomy and how we break down these specific sectors.
Thank you. That's great. I mean, you raised so many interesting points there. And I think something that we come up at in Samudra and elsewhere is the need for new financial products and new thinking, because nature and large ecosystem restoration or resilience investment is different from what people are used to doing. And just the example from Hawaii of having the insurance policy help build resilience before the accident happens. I mean, again, it's one of these very obvious things, but if it's uncomfortable in terms of the people who are structuring the financial products, it remains hard to do. So it's nice to see some local leadership on that. And I would just say the other question or issue you raised around second degree or second order benefits. So in the insurance system, it's hard to have people think about second order risks, and they kind of like to pretend it doesn't exist. But the benefits are so clear to communities for employment or just the whole ocean value chain that you have to consider on the upside, and really illustrating that to people is something that is important. And I think we'll hear a bit about that from Kristiane on the impact side. And there's a couple other things you raised that I'd like to come back to in the Q&A, but thanks so much. And Kristiane, please take the mic.
Thank you. And thank you, Brooke. And so, yes, my name is Kristiane Davidson. I'm the Head of Impact and Sustainability at Oceanborn Foundation, including our asset management arm, Oceanborn Impact. And, Brooke presented some really interesting areas where we need to grow, we need to invest. And I'm going to approach this topic from the investor perspective, highlighting some of the funding gaps and looking at the trends for investment so far, and some opportunities and ways we can improve to, continue to get that funding through. And so, but first I'll just begin by explaining who we are. And I'm going to attempt to share, but it seems to be not wanting to do that. Yeah, let's see if we can manage this. All right. I would love to say I can multitask and share the PowerPoint and talk at the same time, but that might be challenging. Let's see, hang on. Here we go. Voila. You can see that now. Okay, amazing. And so basically at Oceanborn Foundation, our purpose is to create new and sustainable sources of funding for ocean restoration and protection. So as a foundation, we have these 4 business units. So you can see here we have Ocean Beer, which is one of our business units. We also have a B2B uniforming and merchandising business and a direct-to-consumer lifestyle brand, and then the asset management platform that I mentioned, Oceanborn Impact. And in theory, what happens is that the 100% of the profits from these are then able to support our grant giving and investment activities for the ocean. So in terms of investments, we have an endowment portfolio. This is still sharing, right?
Just stop sharing, but I can try sharing on this side.
No worries.
Okay.
Well, anyway, we have an endowment portfolio of 13 seed and Series A companies. And so these are off the balance sheet of the foundation. And I would say about half of these would be what we could call ocean investments, which include seaweed businesses up and down the value chain. I think we have 4. And then we also invested in a marine transportation business. Now, in addition to our endowment portfolio, we are also raising a 250 million euro Article 9 growth equity fund. And this is more focused on Series B and C. So this growth equity space, and we're focusing on Europe and North America. So we're an impact fund. So we're really looking for those organizations, those companies with products and solutions that have sustainability, the mission. And so here we go. And so for them to qualify, and so this is a little bit to do with your taxonomy, right? We've created our own framework, and this is, we're aligning ourselves with the overall framework of the SDGs, but based on our experience and our particular impact focus, we've chosen sort of 4 sector themes, and these are sustainable production and consumption, energy transition, clean transportation and logistics, and enabling technologies. So any investment that we make must fit within one of these 4 sectors. And then, did you manage to share that?
I just dropped it up for illustrative purposes here. Yeah.
Okay. Yes. Thank you. Well, this is one of the slides from a broader presentation. It's not quite the one that I was sharing, but this is perfect. So in addition to the investment themes, each of our investments must also align with one of our impact goals. So these are to avoid and or reduce greenhouse gases, enhance biodiversity and habitats, and protect freshwater resources, and to reduce waste and pollution. So you can see here that actually our investment thesis is not specifically oceans, but these topics are, both the sector themes and the impact goals definitely deliver on, ocean health in general, especially when you think about the reduction of, or the decrease in waste and pollution and CO2 emissions, which are huge stresses on, ocean health in general. So you can take that down now, actually. Thank you so much. So another thing that we try to do in the fund is address 2 specific funding gaps. So these funding gaps that we've identified are for growth capital in general and for SDG 14. So as I mentioned, for the fund, we would be targeting around that Series B and C stage, where companies would be requiring growth capital in order to reach that next stage of development. And so our research shows that there is a funding gap at this stage, which many of you may know, can often be described as the valley of death. And this represents a stage of development during which even companies with a strong business model may struggle to survive and to grow. So globally, we've seen that there's a low level of investment on an absolute basis at this growth stage. But then specifically, we looked at the European level, and that we found that funding at the Series B stage is significantly below, for example, North America for the same sectors. And the sectors that we looked at are those that align with the sectors that I just mentioned, that we will be using as our selection criteria. And specifically in Europe, this funding for Series B was 51% less. And then also the average deal size in Europe, for example, at this late stage funding point was significantly smaller. So this general gap in terms of growth equity exists, but then we've also found in a European commissioned report that this funding gap for growth capital also specifically exists for companies in the blue economy, which, as we know, is already an underfunded area. And so I know that both Brooke and Hamish mentioned some numbers around the blue economy, but I think this one's slightly different to what was mentioned. So, you know, of the 17 UN SDGs, Sustainable Development Goals, the SDG with the least funding is SDG 14, Life Below Water. And so in a recent report on the blue economy, it was found that it's estimated that around 147 billion euros per year globally would be needed to achieve SDG 14 by 2030. And that based on the predicted funding, there's actually still a funding gap of 126 billion euros to be addressed. I mean, that's most of it. So it's a pretty big gap. And I actually want to qualify this quickly, because I know we're talking about the blue economy, but when we're talking about SDG 14 and what, you know, at Ocean Board we look at is the sustainable blue economy, right? So we know that the blue economy can include activities that are petroleum-based or might be destructive fishing practices, but we're looking specifically more at sustainable blue economy, right? So this means activities that are related to clean energy production, environmental conservation and regeneration, ocean observation technology, eco-shipping and transportation, and responsible coastal tourism. I know this is one of the areas that was highlighted by Brooke. And according to a recent report, the 4 most promising areas for delivering financial and impact returns in this sustainable blue economy are, or the way they classify it, is decarbonizing the maritime industry, marine solutions to protect ecosystems, marine renewable energy, and sustainable aquaculture. And we can see, you know, the diagram that Brooke shared with us before, we have some clear overlaps as well there. So this is sort of on the demand side, you know, where do we need to channel this investment? And thankfully, there's already an interest from investors, you know, in growing this investment. And thankfully, because we have that significant funding gap. So the same EU Commission report that I just mentioned, they showed that in a 5-year period from 2018 to 2022, deals in the sustainable blue economy have been on the rise, with a 200% increase in the number of financial transactions. Very promising, with the highest volume of investments actually being in this sort of blue tech and innovation sector, and that was followed by blue renewables. So in terms of investors, this and another report actually have gone through the types of investors and where they've been investing, and I wanted to pull out some of the highlights. So for example, the highest share of investors in this EU Commission report was corporates, and that was followed by venture capital and then private equity. So this is not terribly surprising. And so for the corporates, they were mostly backing acquisitions, naturally, but they also played an important role in co-investing at the various stages, so seeds and Series A through D. And examples of some of these corporates include the shipping giant Maersk, and then we also have Siemens and Damen. For VC, I mean, they were naturally behind most of the equity fundraising rounds. They were they were most active or found to be most active in the European context in circular economy solutions such as plastic waste reduction and removal, innovative uses for seaweed. So this could be for like plastic replacements, emerging blue technologies like tidal turbines, these sorts of areas. And some examples of these VCs include the Norwegian Catapult and the Portuguese-based Faber, as well as the likes of Aquaspark and Future Planet Capital.
Nice.
So there were also more equity and fixed income investments being made. So in the public markets in 2022, nearly 500 equity funds had an average exposure of more than 3% to this life below water SDG 14. And the fixed income space from 2018 to 2022, there were 26 blue bond issuances with a cumulative value of approximately $5 billion, which is, again, extremely encouraging. And, you know, this is great to see it grow, but we have a long way to go. So really, if we want to see this sustainable blue economy continue to grow, we require to increase participation of the public and the public and private funding, as well as philanthropic and non-government organization funding. You know, and we're lucky at Oceanborn, we're able to come from two different angles. And, you know, what we're seeing as well is that it's not just about capital, you know, it's about so much more. And, you know, what some of the trends or some of the challenges that we need to address and the way we can address them is, you know, more cooperation. We really need to see partnerships across different levels of financial institutions. So this, for example, can help to ensure access to small and medium scale enterprises. More cooperation between global banks and local development finance institutions. Obviously, this depends on the geographies of those organizations seeking capital. But, you know, this is helpful because it can fill gaps where maybe the private markets cannot. And then a better understanding of ocean risk and materiality. I think this can help foster more investor confidence. And something that I'm very focused on is the need to standardize and make more transparent ocean-related KPIs, key performance indicators, to measure and manage that impact, to make sure that it is in fact sustainable, a sustainable blue economy. And I think we also need a strong pipeline. And, you know, we're seeing some really incredible, innovative companies coming through, like Samudra Oceans, you know, where they're addressing all of these, you know, top topics that are trending, you know, that Brooke mentioned as well. And so I think this will all meet at the middle, and hopefully that will drive us towards that growth that we're looking for 2030.
Thank you so much. What a whirlwind tour. Thank you. I appreciate it.
Yes.
And the nice thing is Kristiane's worked in the past on green bonds and green finance. And so this
Yes.
whole thing about labeling, structuring, and getting people more comfortable, and then the ability to cooperate and pool financing, you know, different equity or debt structures is really necessary. And I've been working with Samudra on some of this to kind of socialize the opportunity with different kinds of investors. And there's so much education that's required. And, you know, you have to have a level of comfort with the system that you're asking them to invest in, which is ocean aquaculture or coastal restoration. And so we're at an interesting moment now with these taxonomies, or you said ocean KPIs, and sort of that's what people in the larger institutions kind of live off of in terms of that's what they expect. So it's good to hear that's being discussed. And now we're going to hear from Joyeeta at Samudra Oceans, and it's really exciting because, you know, trying to grow a global aquaculture business, it really is putting the pieces together and trying to enable the scaling and the cooperation that you need to actually to really grow these businesses. So Joy, please take the floor, as it were.
Thanks a lot, Hamish. I'm in the ocean a lot, so I'll take the floor for a change. Thanks, Brooke and Kristiane. I think you both provided such a nice overview of different facets of my work life, so to say. It actually give great context to you know, everything that I'm going to say. So I hope the audience is able to flip the hat a little bit and see the perspective of those who are seeking to be a part of this investment sector, what we are doing, and where we've experienced the gaps, and, you know, etc. So I'm going to try and share my deck. And I hope this is visible to everybody. So we are Samudra. Samudra is Sanskrit for oceans, and we are enabling ocean farming at a planetary scale. We currently operate in Scotland, south of England. We have 3 farms in Jamaica. We just started doing some pilots in Canada, and we have a pilot coming up in Peru, one in Oman. So we are kind of already operating in various different locations. And everybody here has already spoken about the potential of the ocean. But what is exciting about working in the ocean sector for me as an engineer, serial entrepreneur with a couple of exits and 1 failure under my belt, I think the interesting thing I found, at least working on the seaweed automation sector, is that we address multiple SDGs, and because it's automatically the kind of sector that enables job creation. It enables equality, because a majority of these ocean jobs that are created are actually taken by the women of the households, like in Tanzania or Kenya or seaweed sectors in SIDS. So it naturally empowers and it creates equality. It also produces, if you use our technology, which I'll get into shortly, it also produces high quality, high protein, high fiber, low carb food, which addresses the food related SDGs and nutrition related SDGs. So what I've found the most important part of our work is we actually sit across multiple sectors. And it's not just me, I think quite a lot of companies like us, we are working with the carbon sector as a carbon uptake type of company. But because we are in organic growth in the ocean, we are in the job creation and impact sector as well. And we actually impact multiple UN SDGs, which in my head actually plays to the climate thesis. Because if you look at Project Drawdown or the Gates Foundation Manifesto, when you're able to create jobs in tier 3 coastal towns, or able to create equality or contribute to the education and empowerment of the girl child, you're also contributing to reduction of emissions. So it's actually a multi-pronged solution. It's human well-being that creates reduction of emission, plus direct reduction of emission and reduction of acidification and eutrophication in the ocean. So needless to say, I really love what we do. This is very interesting. Our team is very varied, and this is not a brag slide, but this is for all of us to know that that to build an ocean company, you need all sorts of people who come from all sectors of life, science and tech and policy and engineering and investment. So what do we really do? What does Samudra do? I've been talking for a while. Who are these people that are in the valley of various deaths and gaps that is already mentioned by Brooke and Kristiane? How are we in those valleys? How did we end up there? So we are scaling biomass production in the ocean. That's what we do. We are robotics and AI to industrialize and scale production in the ocean, biomass, particularly seaweed, but we are also looking at bivalves and crustaceans that are normally in the exact same seabed. Most owners try to use the entire water column and grow everything. And why do we want to scale this so much? Because as I mentioned, it creates food alternative to bioplastics, as Kristiane would already probably know, but also be a source of carbon credits should we choose to sell blue carbon credits, which we did. The reason for that is to be able to produce blue carbon credits out of seaweed and not use sequestration methods like sinking, but use other methods. We need the unit economics to be very, very scalable, very solid, and a lot. Otherwise, we never meet the price that is mandated to be met in the next 6 to 10 years, because most funds are buying for 2030 to 2032. So although it does look like that they are committing to a pre-purchase agreement and the offtake agreement is 6-7 years in advance, they are mandating the price and they're setting it. And most of the price is around $100 to $150, perhaps $200. That's where it's ending at. And if you look at most of the production of the various sequestration methods, they end up at least around 600. So to scale them down to 200 or 120, you start off around probably $2,000, $5,000 even. That's your cost. But you bring it down with innovation down to 600, then you try to meet scale economics with less than 200. That's kind of the goal, like for most companies. And for us, the way we meet that is by scaling this production at a very mega scale, at an industrial planetary scale. But without eliminating jobs, we actually create a way more jobs than it existed in those regions before, and they're actually better off. They're now white-collar jobs as opposed to just being wardens going out into the sea and checking what's happening middle of the night. So this is one quick thing. You can see a little bit of our ocean unit here on land in an exhibition in Somerset House. That's me and my co-founder, two engineers, and are looking very awkwardly at their thing at two sides of the thing. That we're like artists. We make our things and then we look at it and we like find a million faults with every iteration. Even before the customer finds the faults, it's like a problem in our heads. So we're trying to already fix it. This is a TRL9 deployed across 11 different farms across the world. And what it does is it's actually measuring, well, you cannot improve where you don't measure. And so it's measuring every centimeter of your farm, dissolved oxygen, nitrogen, nitrates, carbon dioxide. It's taking photos and it's sending it back to the buoy on top, which is a data buoy with solar panels to power this robotics. And it sends that data back to the cloud. So suddenly you're sitting at home 40 kilometers away and you're looking at your phone on Christmas Day and you're not going out in the easterlies at -3 a.m. and you can see exactly how your farm's doing, which suddenly changes the dynamics, the risk, and the bottom line that happens in every single farm, unlocking scale and liquidity. And this is our entry-level product. We recently just moved on to multiple things. This product has naturally started maturing and producing so much data that we now have a tactical and strategic dashboard, which we leverage with AI to start making predictions around production. And since we have production across multiple different places in the world already, we are able to start seeing a combination of how oceans produce things and how that is seasonal and how that combines with everything else. So we're looking at making that model perhaps a bit open source for everyone else. So in short, and now we're just about to release a product that's a little bit under patent issues, like not completely patented, so I've not included it here, but it's a completely smart pack farm, 40 feet by 8 feet, containerized, pre-seeded, so you can send it anywhere in the world, flat packed in containers by trucks or ship. They unlatch in real time and make any polygon you like in the ocean. And they change your production capacity by over 1,000%. So you can make highly dense packed production happen in a tiny seabed. So 1 hectare can act like 40 hectares. And it's completely automated. So basically, if you classify all ocean assets into these names, which is quite, this is quite very naval operation style. So if anyone in the audience is from Navy or oil and gas, you'll recognize assets production capacity according to names of fish, monk, salmon, dolphin, orca, beluga. And our goal is to take all assets that are monk and salmon level production capacity to be able to produce orca and beluga level stuff. And that creates the level of efficiency you see, or you have seen in the past when the agricultural revolution happened for the first time in land. When we first started having tractors and harvesters and fertilizers, this is the level of production increase we had. And so what this means is we can use far less of the ocean in a far more efficient way, and we can feed, clothe, the next generation, produce biomaterials, and produce decarbonization credits at a low cost in a sustainable manner, producing jobs for everybody without reducing or affecting albedo, which is reflectivity of the oceans, or covering massive areas. In fact, seaweed has been found to reduce acidification massively in the ocean and increase biodiversity to a huge extent, even when you farm it at in a regular way. And so that's kind of how our product has been moving. We started with like the monitoring product, which was unlocking scale and liquidity. We've just launched in a beta phase the second product, which is not entirely in details. It would be commercially available next year early, and that's the flat pack farm pre-seeded. So you go from per kilo production capacity to per 10 tons production capacity. That's how your unit economics changes in a day. And what that is doing is it's unlocking actually other forms of funding for us. So we haven't just done equity funding because we've been able to unlock this level of production. We've actually recently had partnership style of revenue where people have come in and they've partnered their own farms. Like, this is my farm. I want to increase production capacity. Can we be a 10-year partner and work in various ways together? Can we unlock grants? Can we do more tech? Can we sell carbon credits together? We also own our own seabed, as I mentioned. So we've had project level financing at the asset level, where we've had a I think I can't do any details because they're going to do the PR themselves, but it's kind of not an equity funding. It's funding at the asset level for the project with a 10-year payout at a very reduced rate for what they've invested in out of the profits that will come out of the site over time. But that kind of financing actually can only work if it's at a certain scale, because you don't unlock profits beyond a certain level of investment. Like if it's anything below that, it will take 5 years. So what they've invested is a significantly bigger amount than we would have been able to raise by equity, because you know, our valuation wouldn't even be what they've invested as an amount itself. But by doing a payout method over 10 years, we've managed to have that. Then we've had partnership and foundations, kind of like Kristiane mentioned, where there's a foundation that has participated in giving us a grant, which de-risks them and allows them to handhold and have a relationship with us to see how we can partner with their other vehicles. And then we had the classic carbon credits with the Shopifys and the kilotons of the world, which was just a pre-purchase. So all in all, to say that the various funding mechanisms we had to adopt, because obviously mainstream, the classic equity style we see that I've made multiple times in my life is not still so open to ocean-based blue carbon credit business. It's still very new. There's a minuscule amount of people who are interested or aware, or even think this is worth their thesis. So the only way we've managed to do it is to go with this kind of a blended finance mechanism. We've also done a bit of debt over our hardware assets and inventories. So there's debt, there's equity, there's project revenue-based financing, and there's foundational partnerships. And the fifth one is something we're just embarking on, but I'm already seeing promising results, is corporate partnerships, where it will result in offtake agreements, but because there are significant co-benefits, they're partnering ahead of time and seeing if there are other ways they can offer us things that that de-risks their pricing that we are committing to 6 years from now. Because the more they're able to de-risk us now, the more we can guarantee that price in the future, I suppose.
Should we just, we have a bit of time for discussion, but do you want to make any final remarks, and then we'll move into
Yeah, the
stuff?
final
Yeah.
remark is, I would say we startups normally have a very, I think, a glamorous brand everywhere that people think is great fun and greatly interesting. But this is us at -8 degrees in the North Sea after having thrown off everything that was in our stomach. It may be TMI for you, but this is us. And sometimes we're in 5mm wetsuits and still shivering. So it's not actually the most glamorous thing in the world. But that being said, it is actually the most, I would say, the most fulfilling thing I've ever done in my life, where it's not just about your brains and about creating a new company, but it's about starting an entirely new ecosystem, but also using our bodies in the process. So it has been a very holistic journey, and I really love what we do, and I really love that Brooke and Kristiane and Hamish are all in the ecosystem, adding so much value to all of us. Thank you.
Thank you so much. Wonderful little whirlwind, and to see what it takes to build a business and the level of, I guess the whole ocean system is so dynamic. There's a combination of hardware, software, and then there's this whole value chain that is sitting behind it on land that people who want to invest in or lend or ensure what's happening here, you know, have to get their head around. And it was nice. Joy's takeaway was the North Atlantic is cold. You don't want to, you know, you have to be ready to go there. And also to grow seaweed and other things in the ocean. So I just wanted to come back. Now we've had kind of a nice tour of the system and how people are thinking about it, to some of Brooke's comments, and just how, you know, the Tailwind has been going around to some very large capital providers, governments, investors with the taxonomy. What do you think are the biggest gaps in their knowledge, or you know, the biggest challenges when you present them, you know, a climate and resilience taxonomy to guide capital allocation? I mean, what do you think are the challenges?
That's a great question, because with the space being so nascent in some ways, I think right now a lot of folks still think of coastal adaptation and ocean adaptation as just seawalls. That's where it starts and ends, or that's where it's most built out, period. when in reality, at least how we're thinking about the space, and I think everyone in this room is thinking about the space, is much more robust and holistic. And the solutions we're most excited about have, I'm going to say, multifaceted impacts that go beyond, say, just public infrastructure, which of course is essential. Like this, to target this need will take many different players across sectors. But as an example of what that could look like, I'll bring up this company called ReefCycle. So ReefCycle basically creates biocement for coastal protection, but also to develop artificial reef structures that can help restore ecosystems. So they're able to target both protecting ocean biodiversity while protecting coastal communities from, say, impacts of climate hazards at the same time. And this is maybe not a knowledge gap, or excuse me, a misconception, but perhaps a knowledge gap where I realize this space is very nascent. But I think as investor interest is growing, it's really critical that investors consider not just, let's say, the immediate impacts of their solutions, but potential second-tier impacts so that they can mitigate any maladaptation risks that come from adaptation solutions. So what I mean by that, if for anyone in the audience who doesn't know what maladaptation is, that's basically when people, the communities, coastal communities, or ecosystems become more vulnerable to climate risks in either the short, medium, or long term, right? It can go across these timescales. And so if you want to go back to seawalls, an example of that is how a seawall was used in Lagos, Nigeria, a huge city, right, with a really, really rapidly growing population, to protect these particularly wealthy areas in the city. But the seawall instead actually caused informal beachfront settlements to be washed into the sea due to it creating these circular water flows. And so these unintended second-tier impacts, I don't want to bring this up to scare people away from investing in adaptation solutions, because that's so critical. But I do want to say, as investment increases a lot, it's really critical that we make sure to consider the cultural and social and geographic contexts that we're implementing these solutions in.
Nice, that's such an important point, and it really rings true for Samudra and others who are working across a global portfolio, and you need to understand, you know, in meaningful terms, your operating environment. And then, Kristiane, did you have any comments on that question around some of the maybe a misunderstanding or areas where investors need more comfort? And I think your specialism is impact. So, you know, how do you explain that to them in the ocean context?
Yeah, I would say maybe not misconceptions, maybe a lack of alignment. So related to the definition and measurement of impact in ocean investment, right? So we really need clear and standardized impact KPIs or indicators, as well as the harmonization in our understanding of what is and is not sustainable in the blue economy in order to foster investor confidence, right? So, for example, there are some great tools that can help with this. So there's the 1000 Ocean Startups Ocean Navigator tool. This is housed by the World Economic Forum. And this tool is an open source impact KPI framework, and it's designed to simplify and strengthen impact measurement and reporting for the ocean impact innovation ecosystem. This is how they describe it. And so there's 30 indicators, and they quite comprehensively address all the sort of key challenges and therefore the key solutions for ocean health. I would say this is the most ocean related framework, but the other sort of most dominant tool is, and very useful tool, is IRIS Plus. So this is housed by the Global Impact Investing Network, or GIN, and it's a catalog of standardized metrics covering a really, really broad set of topics, so beyond the ocean, but it does include marine indicators. And I would say it's the most widely used indicator catalog based on my conversations with my peers, but also, so say GIN, I think they say that there's 15,000 registered users. And really what this allows, and what the Ocean Navigator tool allows, is a common language for companies and investors to communicate impact, right? So that we don't have this lack of alignment. I mean, there are other tools as well, other types of indicator frameworks. At Oceanborn, we've actually chosen both the impact, so the Ocean Navigator tool and the IRIS Plus. And we've done this because there are some gaps in IRIS Plus, as comprehensive as it is, that we feel the Ocean Impact Navigator tool importantly fills. But really, when we've talked to our peers, our peer impact investors, we've noticed that most of them are taking their own unique approach. They have their own unique framework, and they've selected their own unique indicators, and they have their own approach to measurement and reporting. So I would say right now, not only we not having this alignment, but I think it could be confusing for startups and for LPs, right, looking to invest in a fund, like ours, for example. So, I think what we need and what we're going towards, thankfully, is this sort of standardized, harmonized set of definitions and indicators.
Nice, thank you. That's helpful. I mean, and hopefully the asset allocators in the webinar can take that on board and look at harmonization in their approach. I wanted to ask a question to Joy about just it's come up a lot in the last couple of years around transition finance and large industrial companies looking to invest in ocean resilience and the sustainable blue economy, but often the ones with the expertise are shipping or oil and gas companies who are used to being in the water and doing heavy engineering. In your work with Samudra, how do you find that dialogue or the technology transfer between kind of fairly legacy industries and then to Kristiane's point, the sustainable blue economy that we want to finance and create? Are there synergies, or are they open to partnership?
That's a really good question. I mean, I keep seeing all the programs that everyone wants to do, these corporates, but have I actually seen a lot of them on the field playing with us? No. It's a funny thing that the transaction is happening at a micro level. What do I mean? So a lot of our head engineers are, ex-oil and gas or offshore or naval and shipping. They have been naval architects for 30 years, or they've been at Exxon or Shell for 35 years. So they've been doing this for a long time, and now they want to use that expertise to take out carbon. So my head engineers have actually worked in these fields. They are people who worked for 20, 30 years in these sectors. So the transaction at the micro level is happening faster between these sectors and us. There's movement of people coming over. They want to work in this side of the story, and they recognize that it's time to do this knowledge transfer from there to here, from adding carbon to taking out carbon. And these people understand their language, and they're bringing offshore level of methodology and scale to our business operations and our tech design, which is great for us. It's robustness at that scale. It's industrial scale at aquaculture level. Like, wow, I love that. But at a very at a macro level, at a company corporate level, I think we get into a lot of dialogues, but they don't really go anywhere for anybody, not just us, entire cohorts. I've recently been to at least 3 different regions where there are cohorts of oil and gas operators or shipping operators. And I think that there were 8 or 10 of us in each of these cohorts who were there. Some of these were government programs, and we've initiated great dialogues, all of us, but has there been a great deal of progress? Perhaps not. So I think there's a lot more to be done.
Nice. Yeah, it is interesting. Like if given time, I mean, the whole thesis is the ecosystem can restore itself. And but I think I feel strongly it needs a bit of help. And just to make the point, I have to clarify that behind me there's a whale. There's a whale in in New York Harbor, and in New York City they're not sure why the whales have come back, but the whales are back. And so you can have kind of unplanned regeneration, or like to Joy's point, you can bring in larger sources of finance and capital and corporate capacity to actually enable a transition that you want to see, and it's actually planned. So that's hopefully what we can get to. And then I just wanted to go around with a final question, because in the title of the webinar we have 2030, and 2030 is only 5 years away, and we all know, anyone who's ever tried to do something knows that 5 years is not very long. And it's especially short time if you're trying to raise capital and then build a business. So I'm curious if we could just go around, and I was going to ask each of you, what do you think is the best case scenario in the next 5 years? Like, what's happened by 2030 that you'd like to see? That's a positive development, that is maybe ambitiously positive. So maybe we can start with Brooke.
Yeah, definitely 5 years away. It's kind of scary to think about that, even though I already knew that number. But I just want to focus on how much research and innovation and development is in this space. Like it is happening, and we do need to accelerate it a lot. But just as an example, the U.S. Department of Commerce, basically launched a $2.6 billion framework just for coastal climate resilience through the IRA. And there are so many other incubators and accelerators that are focusing specifically on adaptation, knowing that coastal adaptation and ocean resilience is a key part of that. So I would say look for these things because they are out there and they're going to be increasing, and just more movement needs to happen in the space. That's a simple statement, but that's it.
Nice. Good. It's important to repeat the simple statements because they're true. Kristiane.
Obviously, much more funding flowing towards this space, but I would say to enable that by 2030 or between now and 2030, I would say from an investment perspective, as an industry, we would have addressed some of the current challenges and bottlenecks. So, for example, we would have better understood issues of ocean risk and the double materiality of the ocean. We would have identified better impact benchmarks and private sector science-based targets to help grow and drive that impact. And, you know, ultimately, I think what we really need is to have experienced a mindset, you know, shift, a systems change, where we're ultimately adopting a more nature compliant economic model, right? It sounds like a big challenge, but I think we're on the way.
Yeah, it'd be really nice to see a large, like, influential investor step up and, like, you know, place a bet in that direction, like you just described, and kind of signal to the market that it's happened, because I don't feel like that's happened yet in the blue economy space. But we'll wait and see. We have 5 years for someone to get serious about it at the CIO level. And then Joy, what could happen by 2030 in a
Samudra, our vision for 2032 is actually has always been crystal clear. We want to take out 1 gigaton of carbon from the air using ocean tech. That's what we're working towards. That's our North Star, 1 gigaton. The global deficit is 60 to 80 per annum. We want to take out 1. That's pretty much what we are driving towards. All our numbers, everything is around that. But on a more generic level, I'd love to see some more mainstream thinking and adoption around what Brooke and Kristiane already said, thinking around ocean tech and blue economy. I still go into really famous programs and accelerators where in the drop down, there's nothing that's blue or ocean. I was actually in an event by Google where they asked the thought leaders in a quick game to take a stand in various places. That is their sector. I couldn't take my stand because there was neither robotics nor blue economy. So I was like, where do I stand? So we still want to make this, like, it's not mainstream at all. We need to take this, like 70% of our world is the ocean. And, you know, how can we not have the ocean as something we want to protect and restore, but also the key tool in the fight against climate crisis? This is our weapon. So not having that anywhere really pains me and bothers me, because I also grew up by the ocean. So did my co-founder. So it's personal for me. So I really, really hope that by 2030, we would start to see a lot more mainstream conversations around blue economy and blue carbon and the ocean ecosystem. Yeah.
Nice, thank you. It's really nice to have a little agenda. We have 5 years to work on it, so thank you for those suggestions. And then we have 2 minutes left, and I'm just going to thank everyone who's joined us and online, and also have a good rest of the Climate Week. And then I'm going to ask the speakers for one last contribution, which is your one takeaway for the audience. If they have one piece of information to go start a conversation with later today, what would you like that to be? Brooke, we'll go around.
So I feel like I partly already said mine,
Okay,
but
okay. Well,
just to
repeat it.
Yeah, no worries.
Yeah.
I mean, it can never be repeated enough, especially with this early stage. But to tack on to my earlier point of just obviously the funding needs, but on top of that, considering just how important it is to bring in multiple stakeholders and that you are not alone in wanting to make this happen. The fact that this webinar is happening and that we're all saying this in the first place shows how people from different sides of the party are coming in here and wanting to make this work. And so building in critical dialogues and figuring out how to not just get funding, but equitable deployment in partnership, ideally with the communities that need solutions for coastal resilience, happens at the same time.
Nice, thank you. Kristiane?
Yes, I want to repeat one of the things I said and maybe introduce a new idea, which is harmonize and standardize. You know, I think as an industry, as investors, we need to think about having that common language, that's so that we can understand amongst ourselves, so that we can better communicate with startups, for example. And I would also say, you know, it goes the other way. I would say startups maybe spend some time on becoming impact investment ready, right? Educate yourselves on the common language and the expectations that are put upon investors. You know, for example, as an Article 9 fund, we have these obligations for reporting and disclosure and these sorts of things that are required of us, and that will ultimately impact on a startup. So I think companies be aware of those expectations that are placed on investors by LPs, by regulation, by guiding principles, and make sure you're ready to show them, you know, the data and be ready for reporting. And I think this ultimately allows for an ease of the investment and for more funding and financing to flow to this space where it's just so needed.
Thank
you so much. And then Joy, want to take away?
I'd make a quick generic one to everyone here, panelists and everyone. Every time you're sitting down and having a glass of water or drinking food or looking at your phone, remember this object came to you because it was shipped by maritime at the price you can afford. And the water inside is because of the showers that the ocean made possible. You're sitting in a house where a big component of the cement came from the bottom of the ocean. The food that you ate came because the ocean is the heat sink and 50% of the world's oxygen, including the air that you breathe. And every product you use, most likely your shampoo to toothpaste, has components that came from the ocean. And if your chair is made of wood, even the trees happen because the showers were made possible at the right time, at the right temperature, at the right current. So your entire life depends on the ocean, even though you're not able to see it. So remember that when you invest next time.
Thank you. Yeah, remember the ocean. Think about the ocean. So yeah, I would just thank everyone again, and thanks to our speakers for their wonderful contributions. Really inspiring to start or kick off the week like this. So thanks again to everyone who joined us and the speakers, and I'll put you in touch if you want to get the presentations and talk further. Have a good afternoon and good morning in New York. Thanks so much. Bye.
Thanks, everyone.
Everyone, take care.